The most important part of trading is knowing when not to trade. You have to understand that there are days that are designed to take your money. It's knowing when to sit back and watch. If the price action is choppy, we wait. Algorithmic whipsaw days. If it's lunchtime decay, sideways, low volume, we wait. Heavy chop, news-driven days. If there's news coming in 5 to 10 minutes, we wait. It could be a breakout, but if the setup says otherwise, it could be a bull trap. In this video, we're going to talk about a few things that most traders really don't want to talk about. The boring side of trading. To be a professional, we don't come to the market asking if or when or how I can make money today. We ask, is this market worth trading? We need to see all the variables, every part of the equation come together for us to take a shot. Over the past 2 weeks, we've had 2 bull traps. Breakout traders got caught. They got hurt. Nasdaq sniper here, let's take a look at it. On Friday, February 16th, we had major resistance here from the day before. We had a long trend from 2 p.m. on the 15th that came all the way up into open. And then right after open, price came into this major resistance and we had a bull trap. Let's take a look at it and see what we could learn from this. When we pull in closer, this is on the 1 minute. Number one, this uptrend was violated. Once it broke underneath this level that was trying to hold support, that's a sign that if it goes higher, it might not sustain an all-day uptrend. Let's take a look at the second sign. This is extremely important. At 8:30, this is the 8:30 candle, this one right here. I always teach to make sure you look at the first 3 candles. Is there a fair value gap? 1, 2, 3. No. So these 3 right here, these 3 candles will tell you that there's no momentum to the upside. So what did the price do? The first candle here was green. The second candle came up and took a liquidity sweep. It broke this pre-market. Look at this level right here, right? Price came up, broke this level. So breakout traders got excited. They jumped in. I stayed away because I saw no fair value gap leading up to the open. No fair value gap made on the first 3 minutes. Liquidity sweep and a full retest. What does that show? Weakness. Bull trap. What did the price do? The price fell 300 points. These are the signs that we can look for to avoid getting caught in the bull trap. When that swept liquidity, what did it hit? It hit major, you see this resistance here? Major resistance. Long trend, that was violated. Major resistance. No fair value gap on the first 3 minutes. Rejection after breaking to new highs. Liquidity sweep. Bull trap. How can you play it? You can enter right here. Because when you see the first 3 candles with no fair value gap, you know weakness. So you kind of watch the chop. And this fair value gap right here, bam! It's small, but it's there. That's your sign. And we're off. Once this breaks the 20 SMA, because you see it just chops around, right? You're not confident that it's going to go up. You're looking at this liquidity sweep. You're like, this probably is a bull trap, but you still want a confirmation. Breaks under the 20 SMA, creates a small fair value gap right here. And the next thing you know, take me down to the Paradise City, where you make 300 points. Let's take a look at the next one. All right, January 13th, we look here and we see that pre-market, we had a big move on news, about 90 points. You would have been excited. We might have thought that, hey, because of good news, we're going to be up all day. Negative. Pre-market, after that move, it just came down and consolidated. But what you really want to look at is the opening first 3 candles right here. 1, 2, 3. Is there a fair value gap? No. What does that mean? No momentum to the up. If you don't see a fair value gap on the first 3 candles at open in a narrow state, do not get excited for an all-day momentum day. Even though we got a fair value gap later, about 10 minutes later, it originated on a higher state above the 20 SMA. You can see about 60 points or so between the parent and the child. Now, what happened? It went up, it hit right here, took some liquidity. The people that sold this had their stops right here, snatched their stops. Bull trap, came back down. Breakout traders got in here thinking, okay, we're going to break to new highs and go up all day. Bull trap. Guess what? Came back down. Took out these 3 white knights, engulfing red candle, made a very small fair value gap right here, only about 1 or 2 points. But that's all you need to see. When one fair value gap is taken out and another one comes in, you can get ready for the reversal. That's a sign that it's time to short. You can enter on this bar that came down and closed underneath. Your stop would have been right up here. Follow the 20 SMA. New fair value gap is made. You add, then follow the 20 SMA. Now you bring your stop to here. And then you take me down to Paradise City. You'd be locking in around 860. Your entry would have been around 960. Take profit at 860. A nice 100 points. Now you know what a bull trap looks like when it goes to pretend like it's breaking, goes up to pre-market, breaks just a little bit, takes some liquidity, fully rejects. Now you won't get sucked in, and now you know what to look for. First 3 minutes tell you everything. No fair value gap, no A+ momentum to the up all day. I'm going to be looking for the reversal. You enter 20-minute, 20 SMA, let it be your guide, get your 100 points, and that's how you do it. The Nasdaq sniper here giving you the game. God bless.